Okay, I wanted to create a video for you. I know, at least in one of the classes when we were going over this problem, E6-6, that the video screen was a little bit small. So I thought I'd make a video for you so that I could go over it again. And I brought a picture in of the problem so you can see on the left hand side that we actually have E6-6, the material that was given, and then on the right hand side I've started to create the format for your bank reconciliation. So let's kind of go over the problem. The part that we're going to discuss is the part 1 required, prepare the bank reconciliation. You can see at the top part up here we're given the bank statement. So this is the actual bank statement from the company. That's going to be the information that the bank knows about, but we as the company are unaware of yet. And then over here you can see that we have the cash general ledger account, or the T account, which is a simplified version of the general ledger. And this information provides us what actual journal entries have been booked. So those are the two parts that we're dealing with. The question is how can we pull out this information? And I know this format was a little bit different than one of the ones in the handout, so I just want to make sure that you feel comfortable with it. I think after we're done, you'll find out that this format may even be a little bit easier. Really, it's just comparing two source documents, and you have the information from both sources. You just have to compare and contrast. So let's first start out with the balances here. So you can see on the right hand side here, I've got bank right here, book over here, and we want to start out with the beginning balance. Well, remember, the beginning balance when you're talking about the bank reconciliation is really what is the starting point. It doesn't necessarily have to be at the beginning of the month. It's just simply where are we starting at. So we can see here that the bank statement gives us at September 30th, it gives us a starting point of 230. Notice how this balance up here, it's giving us a running tally of what your continual balance is. If you've looked at a bank statement, you might be familiar with that. And if you haven't, just know that on this right hand side, it's just giving us a running tally. Every time we have something coming in, then it adds to it, and every time we have something going out, it subtracts. So the beginning balance that we start with for the bank is 230. So I'm going to put 230 over here. The next thing that we're going to do is find out what the beginning balance is for the cash, or the book value. And right here we can see that we have on September 30th 2650. So we'll put 2650 over here as well. Okay, so that's our starting balance for each of the points. Notice, because they're different, we are going to do a bank reconciliation. That's kind of the purpose. We want to identify those differences and make sure we have them accounted for. The next thing we want to do is check to see if there's any additions. Let's start by just taking one of the source documents and comparing what information we have in it, and then look at the other source document and say, is that missing? If we look at the cash first, let's look at the cash general ledger account. Notice over here on the debit side, I'm going to put a little DR right next to this. On this debit side on the left hand side, those represent entries that have added to the cash balance. So we can think of those as deposits, because those are making our cash balance grow. So then let's compare that to the deposits right over here. Notice we have a column entitled deposits, and really what we're trying to look for is whether or not there's anything that's included in cash but not included in the bank statement. And when I say cash, I'm referring to the general ledger. So as we can see, the September 10th 3000, that one ended up depositing in the bank statement on September 11th, right? It says it right over here, September 11th, that we actually have that amount come in. It just took a day for it to be processed by the bank. So that one's fine. If we go down, we also see a September 30th one. That guy right there, it shows up on the cash, but it doesn't show up on the bank statement, because you can see there's nothing else in the column of deposits. So in that instance, we need to record that on the bank side as an adjustment, and that will be a DIT adjustment. So it's a deposit in transit, and the reason why we know that is because that deposit has entered the cash general ledger. That's why it's a debit, right? Because we said that those are deposits, but it has not entered the actual bank statement, so it's considered in transit. So we're going to add that to be 2,500 here, and that's on the bank side. The next thing that we want to do is look at the other side of the cash general ledger and figure out if there's anything that's missing from the bank statement that's in our cash general ledger. If you scroll down, you'll find that on September 28th, check 104 does not appear in the bank statement. That check appears on the cash general ledger, but if you can look on the actual checks that we have over here on the bank statement, we have 101, 102, 103, but no 104. So because it's a check, or it's going on the credit side of the general ledger, right, then that is going to be an outstanding check. It's going to be something that has not yet been presented to the bank. So I'm going to write outstanding here, and I'm going to put a subtraction here of 50. Now we don't know if there's any errors yet, but we'll check on that at the end to see if there's anything else missing. But we know that we've looked at all the data from the cash general ledger and haven't found anything else that we need to compare to yet. So now let's go to the bank statement and see what it is that we haven't compared from the bank statement over to the cash general ledger. So now working from the other source document to the other side. We can see that the only column that we actually haven't looked at is this other. We've looked at everything else on the bank statement through looking at the cash general ledger. So when we look at the other account, we see that there's 3 items, and I think that we know how to handle all of these because we kind of talked about them in class. The first thing is the NSF check. Well, that NSF check, we know that that's a subtraction. It meant that someone wrote you a check and you thought that you were getting money, but it turns out that they had no money in their bank account. So in that instance, we need to subtract that. So we'll put 100 because we previously included it in cash, but it turns out it's not actually cash because no one had money in their bank account. So we'll subtract out that 100. Going down that list, the next thing that we see is the EFT deposit. Well, we talked about EFT deposits being deposits that came into your bank account that you were unaware of until you saw your bank statement. Someone pushed you money or sent you money as a customer, and we'll check on that paragraph right below this information to ensure it was from a customer. But someone's giving you money and you weren't aware about it until the bank actually told you. So we're going to add 150 here. The next thing that we want to do is go down that list and look at the service charge. The service charge is what the bank's going to charge us. I'm going to abbreviate this here. What the bank's going to charge us for actually facilitating the transactions on our account. So we'll take off 20 here. Notice that that comes out of our bank account. It comes out of our cash account, and we just didn't record it yet until the bank showed us on the bank statement. So we've looked at all 3 columns of the bank statement, and there was only 2 columns on the cash journal ledger. We've looked at both of those. The next thing to do is just check the narrative data to find out if we have anything else we need to take into consideration. It says that there was no outstanding checks. So you know, I'm looking right here now. I'm looking at this information. It says that there's no outstanding checks and no deposits in transit were noted in August. Okay, so August is the month before, because if we look up here, we're actually looking at September 30th, so we're looking at September. So there was nothing to take into consideration in August. It says, however, there are deposits in transit and outstanding checks as of the end of September. Well, that's good. We've taken into consideration those. We've got one right here and one right here, right? That says that the NSF check and the electronic funds transfer involved transactions with the company's customers. Well, that's great. That's what we thought that it was actually dealing with. It doesn't tell us anything else about any sort of errors, at least for requirement number 1. So I think that now we can probably go ahead and sum up each side and see if we made an error. If it equals out, we should be okay. So let's add this up here. If we add up this, we should get 2680 on this side. Double underline there, and if we add up this, we should also get 2680 on this side. So it looks like the 2 balance, and we should be in check. So that you know, on your actual test or your exam, the documentation that I give you will be more of in a narrative form, but I think that this information is good to practice. It's important for you to see the data given in all different types of format just so that you feel comfortable with it. If you have any questions on this, please feel free to let me know. You're welcome to email me anytime over this weekend, and I'd be happy to help. Thanks.